Welcome back. Final hour session just after 3 p.m. Eastern Time on Thursday the 2nd. Thumbnail today, no non-farm with shutdown. Doesn't matter. We hit a new all-time high today. We opened up with a gap higher. That makes 30 all-time highs for the S&P in 2025. That's not a record. In fact, there have been plenty of other years that we've had all-time highs when the market is sitting to all-time highs, going to all-time highs, continue to reach all-time highs. It is not that difficult. Let me pull up a little stat chart here. I will find the mix. So let me find a print of all the all-time highs that we have seen. So all-time highs, got the Cape Shiller at crazy highs. One of the best returns ever for gold outside of 1979. Year to date, gold's up 47.1%. This is as of the end of September. 1979 gold is up 126%. Wow. 1972, 48.8%. Wow. PC inflation, we'll find out at the end of the month. Non-farm payroll, not going to be announced tomorrow. Let's go to all-time highs. I'm getting there in a second. Let's see. Here's an interesting stat. S&P 500 has posted a positive return during the last 6 government shutdowns. The streak may continue this year. The S&P up 0.4% yesterday's session, hitting another all-time high. Under Carter, Reagan, George Bush Sr., Clinton, Obama, and Trump, we've all had shutdowns. So since 1976, we've had quite a few. More than I thought, actually. Looks like we had 1, 2, 3, 4, 5, 6 under Carter. 1, 2, 3, 4, 5, 6, 7, 8 under Reagan. These are all like, I mean, for it doesn't look like very long, literally like a 2-day shutdown on some. George Bush Sr., 1990, Clinton in 95 in November and December. Obama was October 2013. Trump in January 2018, and also February 2018 and December of 2018. Rough year for that. And then, of course, we just started one officially October 1st. So crazy stuff. I mean, 2018, the return, trying to think when we're going, I'm curious how far they go out. Number of days. Start of S&P, end of S&P. Essentially, it's like when we start the shutdown to wrap up the shutdown. The average S&P return is 0.3%. Let me type this out. And then I want to get into a broken butterfly that is going to get really interesting for tomorrow. I could have made a huge mistake and rolled this too early, but basically if price is going to stay here and try to find a high for Friday, then I'm extending the life cycle of my trade. I might still wash it where I pulled in $1 credit. I rolled for a dollar debit, so I'm essentially flat in the trade. I just want to avoid the $900 risk. So we'll see what happens. But anyway, tomorrow I need price to, now that I've rolled it, I need price to stay above 67, and that's $1,000 winner, which I'll certainly be happy with. And then if I can roll my trade out, which I did to October, that is essentially a wash, but that means I don't lose on the remaining credit spread. So we'll talk about that in a minute. I posted that in my daily profit play here. So my final hour session, here's what I did. Roll the broken wing butterfly. So technically this is rolled. So I rolled. I rolled the broken wing butterfly with a 10-3 expiration. So in my scanner tracker, okay, let's go tracker for daily profit play. 10-3 expiration. We took profit on the 68.25 one. Took profit on the 68.25 one. We have profit on the 67.90 one. And it is the trade. So on my daily profit play, it is trade number 461. So I'm going to put another row in here, 461 roll. And today is the 2nd. Center price is around 67.18. So what I'm doing is SPX, 10-3 expiration, keeping the 6690 by 6700 bull call, rolling the 6700 by 6720 bear call. So I rolled it for $1 debit. So it still remains a 10 wide risk. I rolled it for $1 debit. rolled for $1 debit, which I don't love rolling for debits, but in this case, it's all or nothing tomorrow. If I'm above 6,700, I'm risking $900. If I give it more time, at least I can survive the trade and maybe wash it and possibly walk away with that $10 profit trap. So I rolled the 10-3 expiration 6,700 by 6,720 bear call out to 10/31 expiration for $1 debit. Okay, so the trade is alive. Let's see what the net result is. I'll officially know by the end of October. But at least if we stay above 6,700 tomorrow, if we try to make another high for Friday, then I'm doing the right thing. And we stay above 67, I get $10. That is a nice little profit trap. And then I can keep the other one alive for $1 wash. Okay. All right, let's see here. What's up, Bashy? How are you? BLS labor data has been collected. It's ready for release despite the ongoing shutdown. So are we going to get it? I mean, the calendar should reflect this, right? So I'll go Bloomberg calendar for tomorrow. I'm of the assumption that we're not going to see a job number tomorrow morning. I think it's silly not to, but obviously it makes sense where it's like no news is good news. What does the market know? We don't have any bad data to react on. So non-farm tomorrow morning, it still doesn't show up on the calendar. I have no 8:30 releases in the morning. Everything was tentative on Forex Factory. So if you go to the 3rd, right here, it shows tentative. I'm not seeing any jobs data. And of course, if there is jobs data and it comes out terrible, I mean, how easy would it be to spin that and see like, well, nobody's even working. You can't trust this data. That's the age of spin we're in. So I think I don't know. It could be a big nothing burger. I go back to, where we are at technically. We have seen plenty of pullbacks here in the last couple of months. All the pullbacks have been minor. All the pullbacks have been still very well supported. These are all like, this is 3, this is under just over 2, this is less than 2, this is less than 2. All these have been, this was a 3.3% correction. Under 3, under 2, under 2, under 2, 1. I mean, these are all pullbacks. So, I mean, are we getting a pullback right here? If we challenge the low or take out the low, then there's obviously room to fall. But this structure has not turned over. It has not turned over. So, if this market just keeps wanting to go higher, I am going to let it. And I'm going to try to melt up with it. I mean, I've hit some fresh highs again today. I'm up to 651. I took a screenshot yesterday of my portfolio. Let me go to downloads. So yesterday's highs, 641, 641K yesterday. And today it's at 651. So I take another screenshot today, another year-to-date high. Like, it's not a bad thing. But it's just where we are, man. I mean, we're at all-time highs gold, nearly all-time highs silver, all-time highs markets, all-time highs real estate, getting up to all-time highs again at Bitcoin. Who cares? I mean, I just think it's so funny how bearish the market is trying to be, or how bearish, sentiment is trying to be, when the markets are very often contrarian. And so if everybody sees a telegraphed recession, why would the market go down? I mean, the best way for the market to go down is when everybody is leaning on one side of the ship and everybody is bullish. But you kind of hear it both ways. I mean, I hear some podcasts that are, finally talking, look, everyone's bullish right now. I'm not. Well, you're a contrarian. That's fine. Eventually it might work out. But this is a crazy market, and obviously we know the bubble can remain longer. I mean, obviously the markets can remain irrational longer than trade remains solvent. We just have had zero acknowledgement of data. I mean, we have recession indicators flashing left and right. We have sentiment that's terrible. We have job numbers that's terrible. Everyone's worried. I mean, and again, it's more like Main Street. Main Street's worried. Wall Street doesn't give a shit right now. Wall Street is like, let's go to 7,000. Wall Street's like, let's go to 7,500. This is 1998, 1999. Let's get in there before the bubble. Fine. So what are we dealing with? Fiscal dominance, accommodative monetary policy. There is a 99% chance that the Fed is going to cut this month and an 86% chance they're going to cut in December. Okay. It's the same as what we thought in September. The Fed is going to be cutting rates. So even with inflation data coming, not next week, but the week after, I don't think it matters. I mean, if inflation goes from 2.9 to 3%, does the market actually care? What's the best way to stave off inflation? Have assets. So if you own assets, gold's up, silver's up, Bitcoin's up, stock market's up, 1/10 of 1% inflation does not really change the trajectory of your portfolio. You know, does 1/10 of 1% increase at the grocery store that's going to change the way you buy? Probably not. So I just think people are overly worried for a market that just doesn't trade reality right now. This is not a reflection of the Main Street economy. This is a reflection of future growth and profit margins and optimism. And this is the greatest technical innovation that we've ever seen until it's not, until like CapEx spending stalls. And that's probably the next big shoe to drop is if Meta is not going to spend 35% of their sales on AI build out or data center build outs or this arms race in AI, then maybe the market slows, right? If Mag 7 realizes that, hey, look, we've spent 10, 15, 30% of our sales trying to invest in AI, and now all we've done is spend and we have no revenue to show for it, or our revenues are declining, what happens when all of a sudden the forward guidance and the earnings forecasts get revised lower, right? Everything right now is like revised higher, earnings are supposed to go higher. Um, we just have like the Mag 7 is kind of divorced from reality. We have the broader market that just continues to be lifted up by great Mag 7 stocks and global PMIs that are rallying. It honestly points to higher highs. So anyway, there's a lot of stuff to, be worried about. I think the best thing you can do is be prepared for something ugly to happen, but I still think the market is going to do everything it can to not crash. I don't think the US can afford a crash. I don't think the US can afford a recession. I really don't. The one tricky part would be maybe the bond market. Let me go back to a daily chart here. I mean, the bond market's at 89.50. We're off the lows, but still very stable. We're not getting bonds to rip higher, right? Yields aren't going crazy. We're still disinverted on the 10 and 2 month or the 2-year, 10-year. We're still disinverted on the 3-month, 10-year. But for how long? Who knows? I mean, a lot of manipulation going on there. Here's the let's see here. Here's the 2-year, 10-year disinverted. Here's the 3-month, 10-year disinverted. Is it borrowed time? Maybe. This has been an undefeated recession indicator, but we have now spent from the inverted yield curve to now the disinverted. I mean, it's happened since December 2024. What's interesting is usually this indicator that has called, I think, 11 out of the last 11 recessions doesn't necessarily mean the stocks have to go down, but it also has this big, huge window. A recession could happen anywhere between 12 to 36 months. Well, if this disinverted in December of 2024, what's December 2025? That's only 12 months. That's barely the average. So we could go 2025 into 2026, maybe midterms 2026, maybe 2027. Maybe that's the worst time, right? Maybe the second half of Trump's presidency is not too hot. Who knows? But I don't think price action is suggesting anything other than buy the dip. And, I still want to see a reasonable pullback. I'd love to see a 5% correction. I'd love a 10% correction. But I'm a trader that's looking at technicals. I might not get what I want, so I'm enjoying this melt up to higher highs without really aggressive participation. And that's okay because across the board, there's a lot of ways to benefit. I mean, trades that I've taken this week, we put on trades in, let's see here. I did a broke wing butterfly today during daily profit play. The market is essentially right back where we started. It didn't. I mean, the positive gamma level at 66.95. It came down and hit it to the point. It was a pretty good call. I didn't have the stones to trade it because I thought, well, if we hit the 50%, there's a 6690. We had a low here around 93. So that's a very close call to jump in and do like a 90 by 85 or an 85. I mean, that might have been close. I'm curious if anybody took this trade. I talk about this in my daily profit play. We've expressed this in master classes, watching this level of support, this level of resistance. It started out here, good level of resistance to sell from, level of support to buy from. Where's the market at the end of the day? Right in between. So we're in between the 50 and the 50, a perfect little spot for bear call, bull put, making some profit. Right? Broke wing that I put on this morning is all the way up to 68.25 and 68.35. So price have to continue to get quite a bit higher by next week because I have a 10-10 expiration on those. But that's why I was rolling out my 6,700 because I want to see, if I can kind of survive that trade. So that also brings in I've got a 6640 by 6660 that I've rolled out to the 10th. That's obviously coming up pretty quickly. That's next Friday. We'd have to see a pretty aggressive sell off there. I don't know if that's going to be timed well enough. If we're way up here into the 6700s, I think we're just going to have to pay the piper and maybe take a loss on that one. But I have reduced the cost to I think less than $1,000, less than $900 from initial. How are we on audio? Test, test, testing, testing. Give me some comments. Type in why yes, audio's back. Let me see some comments. I'm still pushing live. We're good? All right. I'm looking for some chat confirmation. No audio. What the heck? 1 second. Okay, are we back? We're good? Yes, yes, yes. That was weird. Okay. So I switched the microphone. Sometimes it defaults to my webcam instead of this microphone. So we're good. All right, fine. Let's continue. Let's continue. So I'm not sure where I lost everybody. But what I was saying is coming into this morning's trading, I had mentioned, hey everybody, watch out for a bounce level at 66.95. Pretty good call, huh? I don't have a crystal ball, but this is about as good as I can find for a visual roadmap and an 8 ball, like a magic 8 ball every single day. This market started up here at 67.31, hit all-time highs, gapped immediately down to close the gap from Wednesday's close. We proceeded down to our positive and negative gamma flip point, which is oftentimes in a positive gamma environment offers support. And what did it do today? Offered support. So I see this stuff every single day. So it offered support. This is my 50% ATR. I am, I wanted to put in a trade here. A 90 by 85 would have been great. I think an 85 by 80 would have been very close. I'm curious if anybody took a trade here, a 85 by 80 bull put spread, if that would have offered $1. It might not have, because it was by this time in a 0-day environment, 11 a.m. to 11:30. It might have been too much time pass in the day. That's a 2 to 2.5 hour push that maybe it didn't offer the full. I would have looked for $1 credit if I took a 5 wide trade. Okay. But that would have been a good way to play today. On the call side, when the market first opened, we opened up near the 50%. So I was going high to think, what, maybe this market again doesn't care. We're gapping higher. Maybe we go higher. So I was trying to sell calls up here towards the 50, 60, and 70 area just to see if the market would stay, again, slowly drifting higher versus ripping higher. Yesterday we took this trade all the way to the close and survived that 67.15 end of the day because we closed at 11. So that worked out just fine. But today it didn't quite come down to the level that I wanted for my puts, and it didn't come up quite high enough to the calls. So I didn't get a daily trade today. If I had members that did the standard daily profit play at the open, we are within about 9 points from the open. It took a while because it ran away from us all day, but we went down for the day, bounced back up. This would have been enough to get us a full profit on our daily profit play. Okay. All right. Good, good, good. All right. Let's keep going. So anyway, this is how I can see this stuff happening every single day. So there's my dynamic trend software, which I have a nice affiliate link for if anybody wants to use this in their own trading. And then I have an affiliate link for Tanuki Trade, which is something I plug into TradingView, and you can see it right here, 66.95 right there, right at the 0 day. There's my gamma pivot. If we break below it, and I said this is the important stuff to watch. Last week's sell-off, when the market was down Tuesday, Wednesday, and Thursday, we were in a negative gamma environment, which means price was below this little pivot. So if we're below, that means usually lower highs and lower lows. When we got back above it, which was the close and open on the close Thursday open on Friday, we got back into positive territory and we proceeded in positive gamma, which looks just like this. Positive gamma is the market is so well supported every single day, it acts like it refuses to go down. Okay. So coming into tomorrow, are we going to stay above this 66.95? Are we going to stay above 6,700? That was a previous resistance. That was previous all time highs. We bursted through it. There's up to 67.32, 30 all time highs for the year. Okay. I do have one more piece. Here is a look at all time highs for the year. We've had a lot of times where it's been higher, by the way. So here's a look. We're at 29. This was as of end of September. So we have a couple more. This is year 30 or 31 for the year. 2024, we had 57 all-time highs. 2021, when that COVID melt-up continued, 70 all-time highs in 2021. That was insane. 2017, eerily low volatility melt-up market, 62 all-time highs in 2017. The market just refused to go down. 2014, 53 all-time highs, 45 all-time highs. So, I mean, being at 30 is not a lot. It's not a lot. Now, even back here in the 90s, stretches in the late 90s when this, we're having the run like it's late 1990s. We had 39 in 96, 45 in 97, 47, 35 respectively. We only had 4 all-time highs in 2000. And obviously, you know what happened after that. And there is, ladies and gentlemen, your lost decade, right? Your lost decade from 2000 to 2012, where the market failed, other than 2007 when we poked those highs and failed once again. I mean, if you weren't paying attention, what happened in 2000? So 2001, we peaked, we crashed, we rallied all the way up in 2007 and 8, and then we crashed again, right? So did it help anybody? No, it was lost decade, and that's what people are calling for now. Is the next time it's going to be another lost decade? Well, maybe it is, right? I mean, if we have a 10 to 20% correction and we still have persistent inflation, it's going to feel like crap. If we can't get prices down, if things aren't appreciating like they have been this year, it's not going to be fun to see the stock market essentially return 0%, right? But meanwhile, like perhaps gold and silver continue to perform well. Maybe Bitcoin continues to perform well. There's ways to trade through sideways markets to still make money. It's about surviving, man. All right, let's get into some other tickers. So let's go. I saw somebody asking about oil. Oil trading at $60. So we're at 60.57. We're breaking some intermediate support. I still think this is I think it's a buy the dip, to be honest. I will probably position similar to what I did before. I still have some trades running in CL for oil futures. It's up about $600, and I'm looking at oil staying above $50 by the end of the year. So I gave myself some wiggle room. What I'll probably end up doing is if we come back down to these lows around 55, is I'll probably do a similar trade. I'll go out to the 50s, out to maybe April, May, or June of next year. And I will look at it's similar to what I do in my waterfall income service. I'll do a strategy 2, but I'll base it in oil futures. I think that's a pretty good trade. So if we find a floor, bouncing off 55 back up to 65, I just think oil continues to stay supply and demand, range bound. It'll find its footing. It's just it's too damaging to go too low, and it's too expensive and war worthy if it goes too high. There's just constant conflict. If it's too low, too high, too many bad things can happen. So it is in the world's best interest to not be, going to war over oil. So I think we have range trades that we're just gonna have to deal with. Okay. All right. Let's go gold and silver. Gold, beware of the overbought condition. I still think gold is a buy on dip, but I'm just telling you, be prepared mentally for a double-digit correction. Gold has potentially a 17% correction. Okay. And I say potentially because we could certainly go below that. I mean, we came The last time we got below the 200-day moving average was all the way back to 2022. It spent some time below that. One thing I will watch is, can everyone see this thick green line on my screen? That is a 10-period monthly moving average. Okay. So if price gets below that, that is usually a time to help you avoid catastrophe. Now, that's a long ways away. So what I am doing is I am dollar cost averaging and scooping up more gold if we have positions fall into these levels. I don't think hitting all-time highs at 38.95 is the end of gold. Okay. I think getting pullbacks and having more chances to buy the dips. I think gold ultimately, it's going to take some time, but gold is behaving like a very different asset now. And I think this is, kind of showing that there's less and less reliance on bonds, and that's a $40 trillion market. So I think that if you have 1, 2, 10% of the bond market that's going to go looking for other assets and other ways to appreciate other alpha, I think that it is kind of borrowed time in the bond market, but probably great for gold, great for silver, great for commodities, great for actual physical anything. And I think that's possibly the bigger threat to the bond market, which is also why the Fed is cutting on the short term side, because everything that we are peddling debt wise is short term debt. We are peddling and servicing short term debt. We are controlling the short end of the curve. So when we borrow, it's 12 to 24 months out. And what we are trying to do with stable coins is get the synthetic bid of a longer duration. So there's just forced buying in the bond market. But the short end of the curve, if they can keep rates artificially low by having the Fed go into a cut cycle, um, it all might work out. It's kind of, creative accounting, but it doesn't keep anybody tied to the US for 20, 30-year duration, which is what's caused, the regional bank crisis in 2023 was a duration problem when interest rates were up. So the longer duration you have, the more you're interest rate sensitive. And that's why there were some insolvent banks in 2023. It was backstopped by the Fed. JP Morgan made out like a bandit. There were some huge banks that benefited from some of those crashes. But here we are, kind of stabilizing. I think financials still look pretty good. But gold, I think a 10 to 17% correction is very possible, but it's not going to be awesome, right? It's not going to be awesome. If we have a 10 to 50% correction in gold, that means something big on the dollar, something big in the bond market. I mean, it just doesn't happen out of nowhere. So the other option is that we just go sideways on gold and we consolidate, and all these moving averages just catch up. Maybe gold doesn't really go down. Maybe it does the same thing like it did here. It went sideways for months. We had a high in April and it took until September, August to break out, right? So it was a 4 to 5 month consolidation period. We made higher lows, higher lows, higher lows, higher lows, and we proceeded to break higher. So if we have another consolidation level, maybe gold is going to find a floor at 3,800. Maybe it finds a floor back here around 3,500. Maybe we don't hit this moving average, but if it just goes sideways, it allows these moving averages to catch up. So I'm looking at scooping up dips on gold at all these major moving averages, even at the 200 moving average, which is what I'm calling for as far as a correction goes. We hit the 200 moving average. I still think the buy zone is resumed. Okay, silver. I hate to say it, but I'm going to be taking some profit on silver sooner than later. What would be kind of nice on silver is maybe we get a pullback first, and then we run into all-time highs, and I can take some profit. So I'll actually add more exposure on silver, and then once we get up to all-time highs, I can take some of that off and then maintain a core position. So if I can get some dips on silver, it's kind of the same thing. We don't have a huge bar count on silver, but we do have very solid support going all the way back here to this kind of wave 3 structure. This is wave 1. This is the pullback zone, which is perfectly at a 618 retracement. And then finishing this move, okay, we've hit kind of this A, B, C, D. We have yet to really see a pullback. So as far as another fib going from low to high, I mean, if this is going to establish a low, this could be the pullback inside of maybe we pull back to $41, $42 again, maybe pull back to $39. But to me, this is just offering up chances to buy dips, right? I mean, if we're not at all-time highs, I'm still going to trade them to all-time highs. The difficult decision is if we get to all-time highs and I take some profit off and it still runs hot, I'll be a little mad because then I'll just be waiting for pullbacks. So if we get a pullback first, awesome. I'd like to get a pullback in silver, load up some more positions, and then take it up to these highs around $50 spot price, and then dump a chunk of my shares, allocate down to like a 10% holding in silver. That's probably where I want to be. I want to be like 10% silver, 10% gold, 10% Bitcoin. I think that's fair. I might step it up a little bit more, maybe go like 15, 15, and 10, maybe. and then play the rest in equities. Okay. So both still look really good. Okay. Bitcoin. What a freaking charge this has made, huh? Bitcoin has come alive in a big way the last, like, what, 4 or 5 trading days. We were down to 109. Now we're up to 120. Let me check something really quickly. I'm going to log into Schwab and see how the old IRA is doing. Actually, let me go into Thinkorswim. I'll log into my web platform a little bit easier. Let's try this. Okay, let's log in. India's imports gold and silver nearly doubled in September, defying record high prices. Yeah, I mean, right now there's a delay in physical delivery because right now the bids in the futures markets are actually wanting delivery of the gold. That's a big difference. Usually it's just like, nothing takes physical delivery. There's delays at the COMEX. There's delays at all these major holding, like the Fort Knoxes, the COMEX, everything in London, everything in New York. It is a crazy, like, central bank and institutional race to hoard gold and silver. Silver is no longer just an industrial. Silver is strategic, which I find really interesting. I just think it makes it a good trade. So anyway, here's Bitcoin. Yeah, I mean, my IRA, 68K this year, now up to 89 for a Roth. It's not bad. Hitting fresh highs overall at 650, not bad. I don't know how much longer this melt up goes, but if it, like, blows the roof off, like, I don't know, man, I might surprise myself and pushing close to 900K for the year. I'd love to put a big goal out there and say, with all my expirations going to the end of the year, there might be enough to maybe test a $1 million this year. So things have to stay in place. I mean, if we have a 20% correction again before the end of the year, it's not going to be that easy to maintain. But I'm still certainly prepared for some pullbacks. It's just whatever forgiveness I can get. Is there an inflation problem when you get silver like above 60 and 70? I don't know. Why is there an inflation problem if you hold the asset? If you hold the asset and it's worth more, you can buy more stuff with gold outpacing the debasement of the dollar. Why is that a bad thing? If I owned a house here's what's crazy. And we can talk numbers here, but if I buy a house, so I buy a $300,000 house in 2021, okay? And this is 300K US dollar. All right. Now that dollar amount is showing my house is worth 600K in US dollars, right? But that's what every other house is. So if I sell that house for 600K and I go shopping around for another house, I can't find another house that's comparable for 300K. That's the problem. If anybody that is sitting on a house right now, that's sitting on a bunch of household equity, you want to sell that house for top dollar, go for it. But you are now going to be closing on a new house that's more expensive at an interest rate that's probably 2 to 3 times what you closed on. That's this weird housing market conundrum that we're in. Okay. But if I bought a 300K house with silver or gold in 2021, okay, we know that the dollar's been debased. We know there's been more printing. We know that dollar amounts, everything's more expensive. Inflation's been running hot at 4 to 5%, truly. And obviously, house prices are just outrageously expensive. So if I bought it in silver, let's look back to 2021 and see what silver is. Okay, because let's just say I had an investment in silver. If I took, if I bought my house in silver, what would it cost me? So silver back in 2021, let's find the prices here. So let's go, we'll just say early 2021. So this is Bitcoin. Well, I can do the math under the screen. So let's go silver. Okay. So if I bought silver or gold, let's go XAG, go to yearly candles, go back to 2021. Okay. So if I bought a house in 2021, silver was 2647. Okay. 2647. So a $300,000 house, it would take 11,333 bars of silver. Okay. So 11,000, gosh darn it, 11,333 bars of silver for 300K house in 2021. Okay. So if I have that many bars of silver, how much is that worth right now? Right now, that same house, 300,000 divided by 4686, now it only takes 6,400 bars of silver. I can get more with less. That's appreciation in an asset. That's what we don't have in the dollar. You know, that is why I think, I mean, gold and silver are probably musts in the portfolio mix, or else we are going to continue to see dollar debasement and people just losing purchasing power and having nothing to show for it. If you look at the inverse of the S&P 500 and put in M2 money supply, they are pretty much in tandem. As money supply goes up, stock market goes up. As the dollar gets debased, stock market goes up. But when that turns, if we turn off liquidity faucets, then that changes. That's where the big corrections happen in the equities market. That's where there's major deleveraging events. Obviously, what people are worried about is this monster debt refinancing window that could be now until end of 2026, 2027, 2028. There's like a big 5 to 10 year window that we have like globally 40, 50 trillion dollars that need to be refinanced. It's not going to be paid back. It just needs to be refinanced. And that's why everyone is borrowing on the short end of the curve. It's like we are only existing in like this 1 to 2 year cycle of just keep going, just keep going, just keep going. So nobody's looking long term. Not for debt. Because long term debt, I mean, it's too expensive. So people are just trying to grab whatever they can in the short term. And that's what the Fed is controlling. That's what the US government is doing. Okay. Yeah, and of course you've got we don't see all that inflation reports because it's core CPI. So you exclude food and energy, and then you have super core, which excludes housing, excludes shelter. Most of the shelter, rent prices have been coming down, but I mean, where? Tell me a place that's charging less for rent. Unless there's insane like vacancies, I don't see people that are like, oh man, rent's really cheap here. I haven't heard that in 3 years, right? Oh, houses are really affordable here. I haven't heard that in years. So it's just a tough market, man. It's a tough position where people certainly feel like if you missed a window to own an asset, it feels like you can't ever get it now. And that's a really crappy feeling. So, I say the best way to get even is you got to play the financial game for what it is. And there's assets that go up. Silver's been great. Gold's been great. Bitcoin's been great. The dollar, I mean, the dollar's been crappy. The dollar's down to one of the worst starts ever in 50 years. But we are sitting at all-time highs in the S&P. Did you know that the S&P has more than quadrupled since 2000? Actually, I think in the last 10 years. It's like within the last decade, the S&P has quadrupled. That's insane. If you have FOREX your money. But has life gotten that much more expensive too? Maybe, maybe not. So, there's a lot of ifs and buts, but we don't talk candies and nuts here. So let's focus on what we can do. What we can do is we can control how we trade, what we risk, and make sure that we're not getting blindsided by something maybe ugly that's about to happen. But I don't think ugly happens with a fiscal policy dominance. Okay. The only thing that happens is if we blow out our deficits, then it takes way more capital to do way less impact or have way less impact. That is a big concern, right? Think about this. We bailed out the world in 2008 for $700 billion. Okay. We bailed out the world during COVID for $6 trillion. So what's the next big bailout? It's not a trillion. We're talking like probably 15 to 20 to 30 trillion dollars. And that is the giant, elephant of like, is that the fiat bubble? Is that the fiat system breaking? Because it's worthless. You can't make that money back. $40 trillion. Are you kidding me? So anyway, that's the weird stuff. It just takes so much more to have an impact. And any growth we see in GDP is typically 1.5 to 2 times leverage right now anyway. There's a lot of leverage in the system. And eventually that leverage will ventilate. It's like if you've got an air balloon, you're just going to open up the bottom of it and it's going to make that farting noise and it's just going to be deleveraging. And every now and then the markets need that. It happened in 2022. Okay. It happened this year. It wasn't even like a deleveraging event. It was just systemic risk, but it was a great time to buy the dip, apparently. So anyway, it's not our last bear market. It's not our last 10, 15, 20% correction. It's not our it's not our last lost decade. There will be plenty of experiences ahead that will be unpleasant. But the goal is, can we survive it? Hopefully we can. Okay. Adrian says Texas is probably the only place where house prices actually went down. Um, I doubt it though. If you go from like 2019 to 2020, 2021, I don't think there's any way that prices are the same as they were then. I feel like prices went up so aggressively through the last 5 years. They might be flatlining. Like I've got a bunch of good friends in Florida. I mean, they're talking about homes that were sitting. A home in I used to work in an office in Lake Mary, Florida, just north of Orlando. There's Lake Mary and Sanford and Smyrna and some of those areas. $350,000 house is now on the market for 750, and they're not going to get it. Like it's sitting on the market for 90 to 120 days, and they're just having to chip away and ask for less and less. But it was a $300,000 house, you know. And I mean, if you're on the water, I mean, there's all sorts of, and there's plenty of migration into Florida for, it's a uh, state income tax that doesn't exist. It's awesome weather. Obviously, hurricanes suck, but you know, I don't think prices are cheaper than 2020, 2021. But Florida is definitely feeling it. It's interesting you say that in Texas, Adrian. It doesn't surprise me, but I'd say it's probably plateaued or decreasing in the last maybe 12 months. But I'd be shocked to see any market that is not appreciated in price since 2020. So, anywho, all right, we're coming into the final few minutes here. Gold, silver, we talked about. Bitcoin, we talked about. Anything else you wanted to review? What else? I'll run through some forex pairs. Yep, sure, of course. Dollar index. Dollar index, I still think the dollar catches a bid. We put in a nice little double bottom here. If it holds, which I think it will, a risk off event gets the dollar up here towards probably 100 plus. If the dollar gets up to 100 plus, there's your potential correction in gold. There's your potential correction with the bond market, maybe the correction in the equities market. Gold, the dollar catches a bid. It does have some consequences elsewhere with those correlations. So dollar strength, I think that's risk off trading. I think that gold could possibly be resilient, but I think equities certainly take a bit of a haircut. Let's go currencies individually. Aussie CAD, I'm still riding this thing long. I think Aussie CAD still looks good to a target of 93.50 or higher. That's my profit target on my Aussie CAD position. I'm also long Aussie Swiss. I'm still getting some swap in this one. I'm looking for this to be a 1, 2. If this wave holds, a third wave for symmetry up to around 5,500. Yen crosses, I'm not convinced that we have a good trade in the yen yet. Aussie New Zealand, my profit target was hit at 1,400. Hooray! Who got out with me? I was long at 108 and 107. Profit target hit. This is now that actually was a limit fill this week. Let's go forex trades, Aussie New Zealand. Trying to find my trade alert here. All right. I know it's in here somewhere. Anyway, I was long and I wanted more. I wanted to dollar cost average in at 106 and 103 and 100. I didn't get the opportunity, but we are at 114. I think this is also a great spot to sell high with very little risk. If you sell Aussie New Zealand, we don't want to go too much higher than the 114, 115 handle. If this is going to put a topping pattern in, this is a great range trade to take it back down into, maybe 100 or 1.10 or maybe 109 to 108. So anyway, point is I was long, took profit at 114. So that's been a nice winner. Aussie dollar. This is what has turned me off the forex trading a lot this year. Is look at how much manipulation is going on with these price actions in dollar pairs. I mean, this thing is clearly going higher highs, higher lows. Holy, wait forever watching paint dry price action. I still think it goes up to 68.90, 6,900, but we might have a pullback that hits 64, maybe even down to 62 before we actually get there. I just don't lose sight of the bigger picture. I think this is still a great trade to the upside, but it's either going to take months and months and months until we get there, or we have a nasty pullback. We still position for it. We still get the trade. It's just, you got to be patient. CAD Swiss refuses to turn the corner. I'm still riding this thing out. I'm going to be long in this one for a bit. CAD Yen's turning south. I'm just not convinced that I've got to take the yen strength right now. Swiss yen is looking better. It's not a topping pattern yet. Not a topping pattern yet. Okay. So high to low. Are we going to continue to test this 181 level? This is 181.80. So if we sweep this low, is this a head and shoulders or crown pattern we can take a swing trade with? Euro Aussie, still garbage, really choppy. Euro CAD has been trending higher. Euro Swiss, I'm long, holding long for that structure at 9,200 support. Euro Pound is just robot trading for me. Euro Yen, similar to Swiss Yen, we'd have to take out the 170 handle. If we take out 170, maybe form a nice little pattern. Anything below 170, if we have confirmed breaks below 170, that could be a very, very nice trade to the downside. Euro New Zealand, overbought on a daily time frame. This actually might be a good opportunity for a strong sell trade. Euro New Zealand sell, Aussie New Zealand sell. Those actually look pretty good. Euro dollar, be careful. Watch the dollar index. I'm probably more interested in if we get a pullback on euro dollar, then maybe like the 112, 110, 108 dollar cost averaging into the support zone and looking to see if it will proceed higher, right? If this is a channel, okay, if it ends up pulling back, I want to buy some more and see if we go up. I can see that being a pretty good like position trade on the euro dollar. But I want to see pullbacks. I don't want to buy this thing at 117. I want to buy it at 112 or 110 or 108. Pound Aussie, no trade. No trade. Pound CAD, still making highs. I don't like the structure on Euro CAD, Pound CAD. Pound Swiss, I'm still long here at 107. I'm holding 107 longs. Pound Yen, no trade. This one might end up setting up a topping pattern. Keep an eye on this yen stuff. If we go, Swiss yen, Euro yen, Pound yen, dollar yen, and we see some structural breaks, that could be the yen basket lining up for a good trade. Pound New Zealand, I think this one looks pretty good for sell trade. So that's Aussie New Zealand, Euro New Zealand, looking good for maybe some short-term strength in the New Zealand with some nice resistance here at 2.32. Pound dollar, I'd stay out of that one for now. New Zealand CAD, I'm still holding this one long. If we get New Zealand strength, I've got a measure move all the way up to like 8,500, 8,530. New Zealand Swiss, I got to wait. CAD Swiss and New Zealand Swiss are a while. Eventually, this has been in a bear market now for a while. I mean, this is embarrassing. I've been basically dollar cost averaging this thing since like 5,300. So I'm down, 600 pips, but my cost basis is down to like 4,900. So I'm still riding this thing out. I've still got some positive swap. It's just been a slow bleeding trade. But if we turn the corner here and get some Kiwi love, I mean, I'm just looking for literally a bottoming pattern that gives me a 1 to 3 wave move. Like wave 1, pullback, wave 3, measure symmetry, get out at maybe 5,200 or 5,300 and just get out of the trade. If I want to get greedy, then maybe hold into a 5 wave move. We just haven't seen anything turn up bullish, right? This has just been, look at how strong this trend has been. Just bears, 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 bears. So until we start breaching these moving averages to the upside, it just isn't enough confirmation to turn the corner yet. But I am long. I'm just in early and I'm in small. New Zealand yen, I'm going to hold off on this one. New Zealand dollar. I think New Zealand dollar looks pretty good. If you're willing to buy in or dollar cost average, buying small and maybe even, 5,800 down to maybe 5,600, stop loss below the dollar swing and see if this Kiwi dollar gets back up to, 63.50 or so. Did you get into the trade? Yes, I did. I got filled in that this morning, Rick. Yep. That got filled during our morning session. Yep. That's a 35 pin on the broken wing butterfly for $1. Yep. Dollar CAD. So I think this is a sell trade. I think if this just pulls back, okay, watch the structure. If this bounces, break structure, this heads lower. And I think you can take this thing down to like 3,400. So, I mean, maybe some solid resistance around 1.40. Probably patience is key. I mean, I don't like the fact that I'd be holding a short position with negative swap. But if we want to see some better volatility, wait for this structure to break. And then we continue on with a high, low, lower high, lower low. and we can take this down to like 34 or 3,200. That's a great trade to get out of for some nice profit, and then I would be scooping up some discounts. But I think this is a sell trade. Dollar Swiss, we're on the right-hand side of this large trend line. We just haven't cleared any recent highs, so it's still a waiting game to see if the structure changes. Dollar yen, it's still noisy. In fact, I was on a live session this week talking about dollar yen. It's very noisy in here. I don't trust the dollar yen. I don't. In fact, I'd probably watch the Swiss yen, euro yen, pound yen as a better trade to see, do we have sustained like yen patterns? Because the dollar yen, I mean, this is literally 3-4 months of just nonstop volatility where it's been like a 300 to 400 pip range. So we'd have to get some wide open space to the downside. If it breaks below, 146, then we can easily sell back off to 140. That is not a bad trade to participate in if we get some clean confirmation. It's a scalper's trade that you can just get in for some short-term swings. But getting down to 140, I mean, heck, man, set that stop loss. If you get into a trade here that's profitable, set the stop loss at break even and like break even stop loss, go to sleep for 6 to 12 months and hope this thing goes all the way down to 120. I mean, it might be that type of crazy trade where once this pattern sets up, if this is a neckline and we break 140, we are going down to 120, and it could be in a beautiful crash type trade. But I will say this as a warning: the dollar yen going to 120 is not a good thing, because the dollar yen going to 120 has major consequences for deleveraging and risk off trading. So that's the one caveat, is if you like this trade, you're probably going to be encouraging a bear market in the equities world. Okay. And that gets us through all currencies. I did all 26. Cool. All right. Couple things in Telegram, couple things before I go. I did roll. I rolled this trade right here. This was again, we're going to see what happens tomorrow. Obviously, if price is less than 6,700 tomorrow, I will regret this trade. Because if we're below 6,700 and we're below 6,690, well, that means I'm going to eat a loss on the bull call spread, and I'm washing the credit for $0. So I might actually take like a $50 to $100 loss, but end of the day, it's better than losing $900. So wishful thinking is the market doesn't really do anything tomorrow, and we stay above 67. This 6690 by 6700 is a $1,000 winner, and that would be great. I got lucky this week, and I had a $410 winner on my waterfall strategy too, that I did roll out the other side of that trade, trying to get it out a little bit farther. So I'm trying to extend the life of these trades, and seeing if we can get some of this like pullback window. Maybe there's some blood in the water / some toxicity in the air that at least gets the market to stop going up for a second. But what do I know? So we'll see, man. Tomorrow, non-farm, that's not going to have any news. So keep an eye on that for tomorrow morning. The day itself didn't go anywhere. We had a close on Wednesday, and we closed here on Thursday. Just a bunch of volatility with no direction. So price didn't go low enough to get my fills. Price didn't go high enough to get my fills. It's just one of those days. So for the close on the day, 67.15. Here is my ATR levels. I'll take a screenshot and put this in my daily profit ATR tracker tab. So we are in between the 50 and the 50 again. Okay. In fact, I might actually make a note here, since I'm pretty fresh to this ATR tracker. Let me make a note. Like yesterday, it was in between. So I'll put here between 50s. Yes or no? So that would be yesterday was in between. Check and see. Yep. So it was in between the 50s yesterday, in between the 50s today. That day, I'm trying to think, the close. What day was this? 9:30 expiration, 9:30. So 9:30. Oh yeah, this was the end of the month. So we were up into the close. What was the 50% up? 66.86, and we closed at 87. So we pretty much like finished. No, I'll put right at the 50% ATR up. Okay, and then on the 29th was here. Probably, yeah, those in between the 50s all day. All right. So what I'm doing is I'm tracking my daily profit play indicator. How many times are we closing in between the 50s? That is a pretty great mechanical trade day in, day out. If you just look at selling resistance and I do credit spreads. So I like to sell credit spreads at resistance, sell credit spreads at support, and see if the market can just dance around between these levels. So I'll take a screenshot here. We closed pretty much a nothing burger today. And I'll take a screenshot. So let's copy link, paste it here. And closing price is 67.15. Okay, so that is updated. I've got the dead zone trade for tomorrow. Has the put to call ratio changed? It's pretty extreme on the call side. Let me see if I can pull up the indicator here. Put call ratio. I mean, it's getting a little extreme. The Edge Finder tool as well. Let me grab a look here. We got it pressing towards the call side. I'll pull it up right here. So sentiment, put call ratio, and S&P. So we are getting near the call side. I mean, this September 2025, I mean, there wasn't really much of a dip. You know, I mean, I guess we had an FOMC dip, we had a post FOMC dip, but it just ripped right back up. This was September. I mean, this isn't coincided with really any major corrections, right? Our big correction here was July to August. July 31st to August 1st was like a 3.3% correction. It's just not showing a ton, but you know, it's going to bounce back up. We'll see. I think that the market having these ventilations, I mean, everything's been pulling back. Every time we've hit highs, we pulled back a little bit, right? So hitting highs, pulling back, hitting highs, pulling back, hitting highs, pulling back, hitting highs, pulling back. I mean, the 1 hour chart is offering some really good dynamic support. You look at it, as long as it stays above this 200 moving average and it clears these lows, higher highs and higher lows persist. If this structure changes, there's obviously a lot more room to the downside based on the daily chart. But right now, this market is just staying complacent, staying positive gamma, and continuing to melt up until price tells to do something else. The last time we had a really nasty sell-off would have been non-farm payroll. If I go to the daily chart, I can find it. So if you look back at our pullbacks here, this was our July to August pullback. I don't even know what this one was. FOMC was all the way up here. Okay. I don't remember what this was. Like, I don't know why the market gapped down. I don't know. 29. It's like, what was this? Was this non-farm? No, I don't think so. Non-farm started at highs and fell off, right? So if I go back, this is probably easier recollection. This is FOMC. So this is our FOMC noise. Non-farm would have been right here. Non-farm was up to highs on the 5th, drop for the day, and we hit positive gamma again by the end of the day. So it got to negative gamma briefly, positive gamma by the end of the day, and then up higher on Monday, Tuesday, up higher Wednesday, positive gamma, positive gamma, positive gamma. Everything was all eyes on the Fed. Market went higher. Post-Fed, market fell. Positive gamma after Tuesday, Wednesday, Thursday, positive gamma was reached on Thursday. Higher, 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 higher. Positive gamma. It happens. Okay, I'm going to let you go. Good stuff. Come back and do it again tomorrow. We will be live tomorrow morning. Daily Profit Play in the AM. Daily Profit Play room is open. You're welcome to join. I do have a couple links I can share. I'll share my Telegram, Chris Pulver Telegram. I'll share this link. And also, if you'd like to join me, I'm doing a new segment on Mondays with Kane Shea. We're going to start doing a gamma report Monday afternoons. So I think that's going to be Mondays at 2 p.m. or 2:30, and we start next week. So a couple of fun sessions there. So I'll be doing my standard daily profit play every single day, macro Monday, technical Tuesday, watchlist Wednesday, trending Thursday, fast money Friday, every day. Running all these services. Kane and I are connecting on a Monday kind of macro gamma report where we just talk shop. We see the markets in a similar way. I'm probably a little bit higher energy when it comes to I know I talk fast and I'm not trying to. It's just I don't know. I think it's because I listen to every podcast at 1.25 to 1.5 speed. So it's just kind of how I'm wired right now. But if you need me to slow down, that's why I do a bunch of master classes for the week because we can take it one step at a time. But there's a lot that I want to cover, and I don't love a bunch of dead air when I'm in these live sessions. So I do talk fast, but I'm not trying to talk over anybody. There's obviously ways I'll break down everything in extensive details. So let me get you a couple links out here. Chris Pulver Telegram link is coming up right here. So there's this coming in the chat. There's also my daily profit plan room. If you'd like to join me Monday through Friday at 9 a.m., here's a link for that. No, that's not what I said at all, Adrian. I'm just saying that I get the feedback where, Chris talks too quickly. I need to slow his, like people listen to my recordings and they slow my speed down. So I apologize for that. This is daily profit plan, weekdays, 9 a.m. Eastern time. And if you'd like to join Kane and I for these Monday gamma report sessions, they start on Monday, October 6th. Gamma report Mondays, 2:30 p.m. Eastern time. I think it's 2:30 or 2 o'clock. Let me double check. 2 o'clock. So it'll be good. 2 p.m. Eastern time. And there's a link for that. Okay. So we're doing the sessions at 2 because if I run a session at 2 and he and I wrap up, I can just roll that right into my final hour session. So what I might do is actually stream to both. I might, do the gamma report and just keep the stream running and then take it for the final hour or just do a brief pause. But either way, ways to trade, ways to join, hopefully ways to learn and earn. Let's keep making some all-time highs. 654 all-time high. Screenshots going in. No complaints. Just a wild and crazy melt-up market. So year-to-date highs. This is October 2nd. Year-to-date highs. And we keep going. So October 1st, October 2nd. I mean, I've probably had 20 plus all-time or year-to-date highs over the last month, August and September. So I am finally getting like the benefit. A lot of my trades too that I was, taking during April, March, May, June. A lot of them are now getting to that time decay cycle where I have done enough in the market where once I start participating in March and April, now I'm to that point where the theta decay. Okay, I don't know what's the theta symbol like that. Is that theta? Time. Okay, time. We're at this point or later. So when we're on the second half of that time decay, my profits that are looking good are looking great. In fact, today I closed out a trade on Costco for a 99% credit. I took the trade for $5.43 and I closed out for a 3-cent debit. No complaints. That was on my Project Options Edge. So trades like that are starting to line up. I've got a lot of trades with a 98% probability of profit, 99.5% probability of profit. That was a lot of it just due to the exposure and being willing to kind of face the difficulty and challenge of the market dropping so aggressively in March and April, but positioning for out of the money options, positioning for income. Okay. All right. So all this is good, and hopefully the melt up continues. If we have pullbacks, I'm ready for it. There's more cash I want to allocate. Don't be super greedy. I'm certainly not going to be, but I think just being systematic, taking some bites, taking nibbles, and let the market do its thing. I shared a stat this week that also every time we've seen new highs in September, 20 out of 22 times since 1950, the market has closed at Q4 highs. So we're clearly on pace to continue just to grind higher through the rest of the year. Whether or not it's going to be like a little pullback coming soon, maybe a little sideways coming soon, but I just don't know if the market can keep going higher without at least going sideways. I mean, maybe that's what I'd be. Maybe I'll shut up about this bear stuff. If the market just goes sideways. Sideways is fine, but up, and away is a little aggravating. Mark says, "Don't slow down." Doesn't sound right. I mean, it definitely doesn't. If I have dead air, it feels weird. I've been teaching and doing this stuff for a long time. So, look, I've listened to classrooms that it's like every sentence is pause and every sentence is it's I don't know. I went to college. I know what lectures are like. So I try to keep it a little bit entertaining where, we can cover a lot of things in the time we get together. So all right, I'll let you go. Thanks for being here. Let's come back to doing it tomorrow. I'll be live at 9 a.m. Eastern time for Daily Profit Plan. Come join me. All are welcome.